And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 24th of December 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY. Here I have the weekly chart. As you can see, last week I called out that I'm looking for this fair value gap, the weekly fair value gap, to be as a drawn liquidity, and we in fact seen how price traded lower and reached to the drawn liquidity. It has taken previous week's low and has reached to it. Now my next target would be the sell side liquidity and the rejection block right there. So we have the rejection block and we have the sell side liquidity here. It is the place where a large liquidity pool of sell stops where it's going to be residing. And next week I want to see price open and trade below and close below the fair value gap. This fair value gap is literally going to be used as an inversion fair value gap that can be used as a resistance that can send price lower to the sell side liquidity. But right there we can, since we have traded to the fair value gap, we can see a retracement to the weekly fair value gap and to the bearish order block before we can resume going lower. Going to the daily time frame, as you can see, the fair value gap, we traded lower last week. I have mentioned that regarding the weekly consequent encroachment, if we close below it, I would love to see price take out the low and reach to the drawn liquidity. And you can see here on Tuesday, so Monday it was a small range, Tuesday we closed below it, Wednesday it was an inside day, it was accumulating short positions, Thursday it broke lower, it didn't take out the low or it formed equal lows, and then on Friday it opened, retraced up higher and then jumped lower to the drawn liquidity, which is the fair value gap. On the daily time frame, I also mentioned that the weekly fair value gap on the daily, it is a bullish order block, and you can see how price is reacting of the bullish order block. So next week I want to see if price wants to continue running down lower, attacking the sell side liquidity here and the sell side liquidity down there, as I've mentioned. That's going to be my review for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame. You can see that we're close from reaching to the buy side liquidity here, and this buy side liquidity, which is the all-time high. Price has formed a fair value gap here. Now I haven't annotated it here on this chart, but you have to measure the consequent encroachment of the premium wick and the consequent encroachment of the discount wick. If we get a daily closure above the consequent encroachment of the premium wick, we'll be continuing running up higher to the buy side liquidity of previous week's high and to reach to the buy side liquidity right there. If we get a daily closure below the consequent encroachment of the discount wick here, I'll be expecting price to open inside the weekly fair value gap. Here for your visual aid, here's the premium wick consequent encroachment and here's the discount wick consequent encroachment. If we get the daily closure above the premium wick consequent encroachment, it's gonna be telling me that we're likely to continue running up higher, attack the buy side liquidity right there. And if we get a daily closure below the discount wick, this is telling me that we're likely to reach lower, take out this sell side liquidity and work inside the weekly fair value gap. So this is gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame. As you can see, we reached to the fair value gap here. From the candles low to the candles high, we have a fair value gap. This can be used as a drawn liquidity, as you can see last week how we traded to it. We have rejection block just above the fair value gap, and we have the buy side liquidity, which is the all-time high. I'm expecting price to continue running up higher we can walk inside the weekly fair value gap if it wants to trace. The area from the monthly inversion fair value gap high to the high of this candle, I'll be expecting this to be left unopened if it wants to retrace and work inside the weekly fair value gap. So if price wants to retrace and work inside the weekly fair value gap, I want to see the area from the high of this candle, which the candle which traded and worked inside the weekly fair value gap, this weekly fair value gap, to the high of the monthly inversion fair value gap, to be this area to be considered as a breakaway gap, breakaway gap, where it's not going to be returning to this area. So I'm still expecting higher prices attacking the all-time high right there. Going to the daily time frame, the same thing can be mentioned on NQ regarding ES. You can see that ES, we have premium wick constant encroachment and discount wick constant encroachment relative to the weekly candle. And the same thing can be mentioned on NQ, the weekly candle. You can just look at the high of this candle, the down close candle. If we get a daily closure above this high, we're gonna be continuing running up higher to the buy side, to the rejection block, and to the high of the fair value gap, and potentially, if it was animated to the upside, reach to the buy side liquidity. If we close below this low, we're likely to work inside this fair value gap, get some liquidity. Below this low, there's sell stops. We'll take the sell stops, we work inside the fair value gap, this fair value gap. We might wick a little bit inside this wick, but then we'll be reversing and running up higher to the drawn liquidity, which is the fair value gap here high, rejection block, and the buy side liquidity. So that's going to be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm also viewing the weekly time frame chart. You can see that we have the all-time high here, the buy side liquidity, prices slowly approaching it. So I'm still bullish on the futures market, ES, NQ, and Dow. I'm still expecting higher prices. I'm saying it with no ambiguity. It's very precise what my words are signaling or what my words are telling. I've been looking for higher prices for weeks now. We have created a fair value gap, price can retrace and work inside of it. You can see that if you compare this week's trading with NQ on Dow with NQ and ES, you can see that on Dow we have long premium and discount wicks. So if we get a daily closure below the discount wick, constant encroachment, we're likely to take out this sell side liquidity and work inside the fair value gap for a while. But if we trade and close above the premium wick, which we are actually close to trade and get that buy side liquidity rather than actually trading lower. So we're inside the range, in the middle of the range. If we get the daily closure above the premium wick constant encroachment, we're likely to take out this buy side liquidity and reach to the all-time high buy side liquidity. So that's going to be pretty much it for Dow. Going to EURUSD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see that we have attacked the relative equal highs that I've been looking and mentioning for a while now. We've attacked the buy side liquidity, and what has told me that we're likely to attack the buy side liquidity is that you can see how the bodies are respecting the weekly fair value gap. This is a signature that price is not willing to trade and close below it, and we have a bullish order block. So many things are telling me that we're likely to see higher prices, and this was just a retracement. And I also called it out that we can see price retrace after this week. You can go back in time and you can see how I mentioned that after this week's candle was printed, I mentioned that we can see a retracement to work inside this fair value gap, and we in fact seen price retrace, form the low this week, the following week, and this week we've formed a low that worked inside the fair value gap, and it has wicked inside the bullish order block. And then we've seen price reverse from there and attack the relative equal highs. I'm expecting price to take out this buy side liquidity, and if it was animated to the upside, maybe attack this buy side liquidity. You can see that on the daily time frame, the premium wick constant encroachment of this candle, I've mentioned that if we get a daily closure above the premium wick constant encroachment, the constant encroachment of the premium wick of this week, if we get a daily closure above it, we're likely to take out these buy side liquidity, relative equal high, and if it was animated to the upside, we might reach to this buy side liquidity. You can see that here on Tuesday also. This is Monday, Tuesday, when we opened and closed above the premium wick encroachment on Tuesday price, and we also opened and we also closed above the fair value gap, this fair value gap that I was looking at. This last week, I mentioned that this is fair value gap is a drawn liquidity, but now as we closed above it right there, this is gonna be telling me that we are treating this as an inversion BDNA, which is an inversion fair value gap. Price has closed above it on Tuesday. Wednesday, price has retraced to the consequent encroachment of the inversion fair value gap. You can see how price is respecting, the bodies are respecting the consequent encroachment. On Thursday, price did the same. It has opened, traded lower to the tick of the consequent encroachment of this fair value gap, inversion fair value gap, and then traded up higher, took out this buy side liquidity, and on Friday, price has opened and just took out this buy side liquidity and reached to the wick consequent encroachment. So I'm expecting now since we're going to be covering also pound USD, you can see that in pound USD price didn't take out this high, so forming some kind of SMT, but I'm still looking for higher prices attacking this buy side liquidity. So that's going to be pretty much it for Euro USD. Going to pound USD, also known as the cable, here we're viewing the weekly time frame chart. You can see that how price has formed a lower high on pound when comparing it to Euro USD. Price has formed a higher high. You can see that we have formed relative equal highs last week. Since this week we formed relative equal highs on pound USD. So, and we also has formed inside week. You can see how this high is lower than previous day's high, and this low is higher than previous day's low. So price, this is also telling me that smart money are accumulating positions. They're accumulating positions in this tight range because they accumulate positions in consolidation and they offset those positions. If we get a daily closure below the discount wick encroachment, we're likely to see price take out the sell side liquidity and walk inside this fair value gap, small fair value gap, and the inversion fair value gap, and then if it wants to retrace and walk inside the buy side liquidity, it can do so. Otherwise, if we get a daily closure above the premium wick encroachment, we're likely to see price attack the relative equal highs here in this buy side liquidity, and if it was really animated to the upside, if we can see an explosive move to the upside attacking this buy side liquidity. Going to the daily time frame, you can see how we formed lower highs. Comparing it to Euro USD, we formed a higher high. So we have kind of an SMT here that is potentially sending me a signal that pound USD is weaker. But when you compare it, you can see, sure, pound USD is looking relatively weaker than Euro USD. But when you actually look into the underlying pinning of pound USD, you can see that there's a fair value gap here and the bodies are respecting this fair value gap. I didn't draw it to make the charts clean, but you can go to your charts and you can draw it. You can see the bodies are respecting the fair value gap. Only the wicks are wicking through it to accumulate more positions, so smart money would be accumulating positions there before we actually attack the buy side liquidity here. This high, we have relative equal highs, and the buy side liquidity would be resting above these highs also. So that's what I'm expecting next week. I'm still expecting higher prices. Although there is an SMT, we can still see higher prices. But what's going to be telling me is that if we get the daily closure above the premium wick encroachment, that's going to be confirming to me that we're likely to see higher prices. And if we get a daily closure below the discount wick, and relatively I want to see price close below this fair value gap, not just below the discount wick. I want to see price close below this fair value gap, so I can consider price likely to be reaching to these relative equal lows right there. That is going to be pretty much it for this weekly review. I just want to add that next week we have a holiday, so it's a bank holiday, so it's better for you to stay off the charts and spend some time off the charts to recharge the batteries. That's gonna be pretty much it for this weekly review. I hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wabarakatuh.